Hello, Market Insights watchers. In Market Roundup, December jobs numbers are in. See how they affected Fed rate cut prospects for March. And in Tech Megatrends, find out what growing energy market has companies rushing, absolutely rushing to supply it. Let's get to it. First off, Happy New Year, everyone. I hope your year is off to a great start. Ian is off today, but will be back very soon. So in his absence, let's get straight to the market roundup. Like the November's jobs report, December's report this past Friday showed U.S. employers added more jobs than expected, and the unemployment rate held steady at 3.7%. Non-farm payrolls increased 216,000 following a revised 173,000 advance in November. The wage gain also was stronger than expected at 0.4%, same as the previous month. And the year-over-year increase, in fact, rose 4.1%. Now, this is indicative of a tight labor market. Meanwhile, December's labor participation rate, which the Fed watches closely, declined to 62.5% from 62.8% in November. This rate has slumped to the lowest level since last February. So the strength in wages combined with the drop in labor participation just may make the Fed reluctant to cut rates as early as March. I was checking the probability table of a rate cut potential in March, and that now stands at 63% versus 84% a week ago. So what does this all mean? Well, as I said, after the November jobs report, the Fed may have to hold rates higher for a bit while longer. In tech megatrends, a new energy trend has companies rushing to supply its growing market. I'm talking about the energy storage market. Here's what's happening. Energy storage costs dropped 24% globally in 2023 to a record low. This is creating investment opportunities in stocks that focus on energy storage. More on that in a moment. According to Bloomberg NEF's latest cost survey, the global average for turnkey 4-hour energy storage systems fell 24% in 2023 to $263 per kilowatt hour. Now, prices fell, according to BNEF, due to decreasing raw material prices as well as market competition. Bloomberg NEF reports, quote, after an unprecedented rise in 2022, pandemic supply chain disruptions have eased. Alongside lower lithium prices, a new era of battery oversupply and overcapacity has emerged. Companies are rushing to supply this growing market. BNEF expects costs will continue to fall as improved battery cells and system designs are adopted and competition continues, end quote. And it's not just Bloomberg NEF forecasting this growing trend. As reported by Energy Storage News, analysis firm Energy Trend is predicting a surge in the global large-scale energy storage system deployments this year. Now, when focusing on the U.S. market, they found U.S. markets, quote, appetite for large-scale storage will be strong in 2024 due to highly economical and diversified profitability model, end quote. Now, per Energy Storage News, the growth of the variable renewable energy is a main driver for increasing energy storage adoption. Plus, nationwide, the U.S. has, well, we all know this, weak grid integration, making for the need of energy storage downright urgent. Right now, we're seeing this energy storage revolution playing out in Texas. As seen in this headline from PV Magazine, a huge Texas battery energy storage facility has begun operation. The 300 megawatt hour Revolution Energy Storage Facility was completed in 1 year, on schedule, and within budget. Spearmint Energy, which is a private company, began construction of the Revolution Battery Energy Storage System facility in the Electric Reliability Council of Texas Territory in West Texas. This is just over a year ago. The 150 megawatt, 300 megawatt hour system is among the largest battery energy storage projects in the United States. And it's thanks to government incentives led by the introduction of the tax investment credit for standalone energy storage, brought in with the Inflation Reduction bipartisan legislation that was passed. And it's highly likely that more US energy storage facilities will come online. Lastly, beyond 2024, the Solar Energy Industries Association forecasts US demand for battery energy storage systems has the potential to grow sixfold by 2030. So, how can you invest in this trend? Well, first consider buying into the ARC Autonomous Technology and Robotics ETF. The ticker is ARKQ for an all around investment play. This exchange traded fund invests in equity securities of companies that are really relevant to the theme of the Industrial Revolution, which energy storage fits very nicely into. Companies in this ETF are really expected to focus on the development of new products and services, technological improvements, and of course, advancements in scientific research related to multiple variety of industries. Now, for individual stock ideas, as BNNEF notes, Tesla is considered the most bankable battery provider stock, and an open trade in our True Momentum service is considered the most bankable energy storage system provider. Now, we're currently showing an open gain of 135% in this stock. Now, to get this stock's name and ticker and access other recommendations in the True Momentum model portfolio, please see the details in the email accompanying this video. And if you're watching us on the Banyan Hill YouTube channel, please click the bull icon right here over my shoulder to get more details on True Momentum's trading service. So that's it for this week. I want to thank you so much for watching. And if you have a question or a comment, please write us at marketinsights@banyanhill.com or drop a comment in the YouTube video if you're watching us on our YouTube channel. And if you're watching us on the YouTube channel, please like, subscribe, and share. So until next time, everyone, please take care. Have a great week ahead.